So let's talk a little bit about, and I'll use Apple as a chart, a little bit about support resistance. All right. So I'm a believer personally in charts in terms of horizontal support and horizontal resistance. And let me find a better chart because Apple been going up so much. It's no, this chart would be a bit better. Okay. So it doesn't really matter the instrument. I just want to be able to find something I can illustrate pretty easy. No, I don't like that chart either. I'm trying to find some. Okay, a little bit. So you can say here, this is Autodesk, right? And so from support and resistance, what support is like an area that a stock will go down to, and then it will pivot and start to go back up. And then if that area is hit more than one time over a long range, then it can start to identify a pattern. So if I were just to look at this chart and I say, okay, where are some of my support areas, right? So if I'm just start drawing just at some support areas that I see, right? So I'll call that a support area. I would move this out of the way. I will call this another support area here. Let me lock this in. I'll call this another support area here. I will say that this is another support area going to the right here. So all these red lines are support areas. Now you can see in some cases you have areas that were previous support. It goes on to establish a higher support, but then it comes back down, and that previous place of support, it actually goes back to. So we can see as it relates to today for American Tower, this is a cell phone tower company. You can see that this stock has come back down to some previous support after having broken through and went much higher, only to come back down. So charting horizontal support in terms of looking at charts is really a good thing to do. And just like you have support, you also have resistance. So I'll draw some resistance points, and I'll just make it a different line. So let's see here. So we can say this is resistance at this area. Let me use a different color for resistance. I'll use yellow, and I'll use something a bit. Make it green. That's fine. So these green bars can represent, horizontal resistance. And what happens over time is that you'll be able to, chart out, draw support and resistance lines on your chart, and they can become areas that will help you in deciding, what you may want to do about a particular, what decisions that you want to make about a particular company. So one thing, and I didn't mention this before, but in our candlestick discussion, really all a chart is doing is plotting where buyers and sellers actually made trades. Because say, for instance, you can hear, you can turn on CNBC and you can hear an analyst or talking head say, hey, I think this stock is going to do this or this stock is going to do that. They're just making predictions at that point. But when you go into a chart is going to show you historically, what did people do with their money in terms of buying and selling at a particular instrument? And all of that data around those trades are just plotted, and that's what ends up becoming your chart here. So, and the reason for this is it, to me, where it has a little bit more validity than some of those predictions. It shows what people and or machines with automated trading these days, what they have done at certain price points. So what these support and resistance levels do, it can show you behavior of market participants in terms of what they've done in the past. And can you use some of that past information to be an indicator to try to get some probabilities into your favor around the different decisions that you may make concerning buying and selling. So, this is just a pretty quick run through of just support and resistance, but you can start looking at this, using this as an example. So you can take any chart, and the way I think about it, if you can find 2 points on a chart, so you can draw a horizontal line between 2 points if they're, horizontally matched one to another. And these are horizontal support and resistance. Sometimes people use trend lines to kind of show ascending or descending support and resistance. But I use horizontal resistance kind of as a stronger indicator of points on a chart for me. Now I know Dwayne he's definitely a fan of moving averages. So I just clicked on moving averages here on this chart. And so you see a red, a green, and a purple. And the red represents an 8-day moving, green is a 21-day moving, and then the purple is a 50-day moving average. And moving averages is basically like, say, me, Dwayne, and Kyle, if you gave each one of us a number, right? And so it would be like 1, 2, 3. And so every day, if we got a new number, we would just plot our numbers on a chart. And every individual plot, we could just connect them together. And when you connect them together, what it ends up forming is a line. And the difference between an 8-day, a 21-day, and a 50-day is how much data is in that particular period. So since this is a day period, so even if I clicked on a 2-hour, even though I have an 8, 21, and 50, it would be based on 2-hour increments. Versus if I were on a daily chart, it's based upon individual days. So you have to look at the time frame you're in to the number that corresponds to the moving averages. And what moving averages does, it just smooths these jolts up and down and give you an more of a smoothing curve to make decisions. But like a 50-day, an 8-day, and a 21-day, depending upon the time frame you're trading in, can be huge indicators to help you how you want to trade a stock. So that'll be a little bit more advanced as you go along. But I just wanted to mention that if you hear us talking about moving averages, and so we can get into that at some point more. But just kind of closing this topic up, down support and resistance, vertical lines to where points on the chart that they've eclipsed before. And if you start to see them hitting an area multiple times, within a time span, you can just draw those lines and they will help you to see, okay, so today, let's say here, if I was looking to buy this stock here, right, and I could say, okay, well, actually I just erased the line, let me draw it back. So if I say, hey, here's my support line, I could say, all right, if I wanted to buy here, if I look at what has happened in times past, and even if I extend this over, I can say at one point this was resistance, but once it went higher, it became support. So that's one thing. Anytime you go higher than a particular area or higher than a resistance level, then it becomes support to the downside. If you go lower than a resistance area, it can become support. So let me draw this line here and illustrate the point. So in this area, if let's say we don't have anything to the right, this is the last point that we have here where my mouse is. If I came back down to this area, right, and I don't have the luxury of seeing what's to the right here, I would say that this is a resistance area. A support area. But once support goes below it, then you can see here now it serves as resistance to the top side. And it got above it, became a little bit of support. It didn't hold, and then it broke back down through it again. And now we're at a new support area here. So I think support and resistance are, again, strong indicators for giving you a little bit more data to help you make your decision.